All right, welcome back to another episode of the Black Bullion Show. All right, guys, you know the saying, no pain, no gain. And just as you guys need resistance to tear down those muscles in order to build it up, the same thing holds true in the markets. And as you can see, gold and silver hit straight drops overnight, but they're climbing their way back up, especially gold. Now, find out why shortly, but first, if you're new to this channel, please hit that big red subscribe button right down below. Also, please hit the like button, helps to get this economic evangelism right on out there to the masses to bring more people into precious metals. Okay, so first off, have to shout out Mark Nordgaard for asking the following question. And what's the reason silver crashing down now? Well, after doing some digging, I found that around 11 p.m. and 4 a.m. Eastern Standard Time, both gold and silver hit huge vertical drops. And this was after both metals hit their highs for the day. Around these times, the DXY showed the dollar gaining a bit of momentum as well. So what exactly happened? Well, gold pairs gains from record rally as dollar slide pauses. So let's get into the weeds of this a little bit here. Just going to read these bullet points. Spot gold was up 0.1% at $1,943.14, but off its peak of 1980 per ounce, with the dip also attributed to profit taking. So we had some profit taking there as well. Silver also trimmed gains. Let's go down a little bit. Gold paired gains on Tuesday after a record run as the dollar regained some ground, although U.S.-China tension and bets for the U.S. Federal Reserve to reiterate a dovish policy stance underpinned the metal's safe haven appeal. So it seems that CNBC has attributed the dives to profit taking, while still saying the overall environment is still bullish for gold and silver. Now, let's take a look also at some other sources. We have Kitco here, basically saying the same thing. Both markets are seeing normal downside price corrections and solid uptrends as the shorter term futures traders take some profits from the recent gains. And also we have another source confirming this with Yahoo News, also pointing to profit taking as well. Take a look here. Gold's record-breaking rally showed signs of flagging after futures touched $2,000 an ounce for the first time. Silver also fell as investors assessed whether precious metals rose too high, too fast. Both metals retreated after touching fresh highs earlier Tuesday as traders looked to lock in profits. So there you have it. The correction, and here's another analyst saying, that correction was overdue after the massive increase, which culminated overnight. In addition to this, the two-day Federal Reserve meeting that starts on Wednesday may provide more direction. There are some expectations that setbacks in the global fight against the Ronies will push Chairman Jerome Powell to signal that rates will stay near zero for longer. So with the environment still looking bullish for gold, more of a boost will likely be given via the Fed come Wednesday. But hey, they also gave us an early Christmas present, so to speak, with this news that the Fed is extending its lending programs until the end of the year. There's the man of the hour right there, Jerome Powell. And I quote, "The Federal Reserve said Tuesday it is extending its menu of lending programs to businesses, governments, and individuals to the end of 2020. Originally set to expire September 30th, the myriad facilities stretching from credit to small businesses up to the purchase of junk bonds will now stretch to December 31st. The Fed began rolling out the initiatives as market functioning broke down in March. A lack of liquidity stemming from fears over the Ronies froze markets and pushed the Fed into various credit facilities, a number of which had their origins during the financial crisis. So that extension is a nice gift to all of us precious metals bulls. It's also a forecast into what the Fed meeting will lead to. Seems like that kind of action would only be consistent with the thought that the economy will need help for longer than anticipated. In addition to monetary policy, here we also have some fiscal updates as well. Here we have what you guys may have heard about so far, called the HEALS Act, which stands for the Health, Economic Assistance, Liability Protection, and Schools Act, which includes a second stimulus check worth up to $1,200 for the same group of Americans as the last round. So I can't wait to put that towards some gold or silver. Also, it will extend enhanced unemployment assistance at a lowered rate of $200 per week, down from $600 per week previously, until states could deliver a replacement worth about 70% of lost wages. The Senate's $1 trillion stimulus plan diverges considerably from that floated by the House Democrats earlier, which calls for more than $3 trillion in relief, and includes an extension of the flat $600 per week in unemployment benefits until January next year. Here's a quote. "We don't know for sure how things will now play out. Either side could blink, though we think substantial movement is much more likely to come from Republicans," Ian Shepardson, chief economist for Pantheon Macroeconomics, said in a note Monday evening. "The most likely outcome probably is that the idea of a narrow bill is abandoned and a long slog of negotiations then follows, with the congressional recess delayed. In the meantime, we'd expect to see the near real-time economic indicators deteriorate further as household incomes drop after the expiration of the initial enhanced unemployment benefits," he added. So we'll likely get more support from the stimulus package. And what's interesting to note here is that we will have some immediate stress, come next week, as the people who are getting these benefits have to deal with this transitionary period between their enhanced unemployment payments ending and the updated amount starting. Now, if we get this bill passed soon, there may not be much friction between during the transitionary period, but in this, I guess, but if this iteration passes, Americans will have to deal with a 2/3 cut of weekly payment from unemployment. So with all of this happening, where does that leave our gold and our silver? Well, we're up, guys, and gold especially is up. So we're doing just fine. We're making up for some of those lost gains that we had earlier. But take a look at two time frames here for both gold and silver. Take a look around the 9 o'clock hour. So that's right in the middle here. It begins to trend down here in silver. It begins to trend down here in gold. And around that time, we got the Case-Shiller U.S. National Home Price Index. And though those prices did rise 4.5%, it was at a slower rate than the previous 4.6%. And it rose 4.5% in May. So these are the May numbers that came out. Now, the real jump, as you can see in prices, came around the 10 o'clock hour, as you can see for both gold and silver. Why? Well, it's pretty much because of this. The Conference Board Consumer Confidence Index decreased in July. So let's get into it. The Conference Board Consumer Confidence Index decreased in July after increasing in June. The index now stands at 92.6, down from 98.3 in June. So a little bit of a drop there. The present situation index, based on consumers' assessment of current business and labor market conditions, improved 86.7 to 94.2. However, the expectations index, based on consumer short-term outlook for income, business, and labor market conditions, decreased from 106.1 in June to 91.5 this month. So guys, we had some action today, but in general, things look pretty good for precious metals, the overall environment. We have lower consumer confidence here, as we just saw, fiscal updates to expect, monetary updates to expect tomorrow, and all of these things to me point towards more bullish behavior in precious metals. So yes, we did have some quick drops earlier today, but don't worry guys, we just hit some resistance and we're going to be building muscle as time goes on. So that was your Tuesday, guys. I hope you enjoy the rest of your day. Stick around. We're going to have 2 more episodes, one in an hour and one in 2 hours from now. All right. Thanks again. Please hit the like button. Please subscribe if you're new. It's Black Bullion.